An unusual split has opened up on the Fed's rate-setting committee. That means a rate cut is possible later this month. China's economy is proving remarkably resilient to Trump's tariff talk, and New Zealand business confidence improves, but the activity remains soft. That's coming up in our 5 Things in 5 Minutes on Tuesday, July the 1st. And then in our deep dive interview, ANZ Group Chief Economist Richard Yetsenga and economist Sophia Angala analyse the growth opportunities for Australia's First Nations economy.
The proportion of First Nations people who own or manage a business have grown over the past 5 years, whereas if you look at the national trend, it's actually declined.
But first, in 5 and 5 with ANZ, I'm Bernard Hickey, and I'm celebrating being back with that refreshed 5 and 5 theme track, which I all hope you enjoy. Now, ANZ senior international economist Tom Kenny says an unusual split has opened up on the Fed's Open Markets Committee, with 2 governors now saying they're open to cutting at this month's meeting.
Since 2006, there have only been 2 dissents from governors. One was Waller in March of this year, where he voted against a 25 basis point cut, and the other was Bowman in September last year, where she dissented against the 50 basis point cut, preferring to move by 25 basis points. It's interesting to see that their view has flipped now. We would need to go back to the early 90s to see the last time when there was 2 dissents from FOMC governors. We don't rule out the possibility of an easing at the July meeting, but we would think it's a very low probability event.
In markets overnight, the S&P 500 pushed up another 0.2% to fresh record highs by 4 a.m. Sydney Melbourne time. The US Treasury yield, the 10-year, fell 2.3 basis points to 4.23%. Gold was up 0.7% to $3,306 an ounce, while West Texas Intermediate futures were down 0.8% at $65.03 a barrel. The US dollar index fell another 0.6%. The Aussie dollar rose as much, 0.7% to 65.75 US cents, while the Kiwi will open up 0.6% at 60.923 US cents. Number 2, China's Purchasing Manager Indices data for June yesterday showed the factory and services sectors are coping remarkably well with the trade dramas, as ANZ's Chief Economist for Greater China, Raymond Yung, explains.
The earlier worry we had in April when we saw the Liberation Day and worry about that the Chinese export will collapse like the situation in GFC or the quarter of the COVID year 2020. It didn't happen. And I believe that the Chinese activities holds up and the GDP number will pretty much easily to touch the high side of the 4.5% to 5% range.
Number 3, ANZ's Business Confidence Survey in New Zealand for June showed a rebound in expectations for the year ahead, but actual conditions in the economy over the last month remain tough, says ANZ New Zealand Chief Economist Sharon Zollner.
We saw business confidence up 9 points and expected own activity up 6 points. So that wasn't a surprise insofar as if we look at the movements within the months of April and May, we could see that those measures tanked when the Liberation Day tariffs were unveiled and markets lost the plot briefly and then had been rebounding. So in that regard, it wasn't surprising to see that the month average for June was higher. Less positively, when we ask firms about how the last month has gone, past own activity fell 3 points to just +2. And past employment it was flat, but it's at -10. So there's still more firms saying they've got fewer staff rather than more compared to a year ago. So both of those are still very subdued.
Number 4, Sharon says that business confidence had really improved last year, but the dramas internationally have dragged it back over the last few months.
So business confidence just took off when rates started to fall, but rather than saying that firms expected things to be fabulous, I think a better way of characterising it would be that expectations of a recovery were very, very widespread, which makes sense because the Reserve Bank was quite open about the fact that the recession was on purpose. It was caused by higher interest rates. So of course, firms figure that lower interest rates will fix it. And it is fixing it, but it's been a bit stop-start, and probably the uncertainty about what's happening offshore will have been an additional unhelpful headwind. So things are improving, but it's still pretty tough going here and now, particularly for the retail sector and construction.
Number 5, in Australia, private sector credit, or bank lending, rose 0.5% in May from April. That's after 0.7% growth the previous month. ANZ Australia economist Maddie Dunk reports business lending was the weaker link in May.
Across the categories, we saw a bit of a step down in business credit growth, still grew at a reasonably robust 0.8% in the month, but that was down from the 1% that we'd seen the month prior. We saw that housing credit growth was relatively stable at 0.5% in the month. We did see across the more detailed data that investor lending was a touch softer than what we'd seen the month beforehand. And then looking at personal credit growth, we saw a bit of a pickup there actually.
Maddie Dunk there. Now, in our deep dive interview, ANZ Group Chief Economist Richard Yetsenga joined up with Sophia Angala to review a Deloitte Access Economics report into Australia's First Nations economy. Here's Sophia talking to my colleague Alex Tarrant about the characteristics of the First Nations economy.
Taking the analysis from the 2024 Dylan Dewar report, as of around 2021, we have over 13,000 businesses operating in Australia, which were majority owned by First Nations people. And overall, they've generated over 16 billion AUD in revenue. So a large share of that revenue is generated in industries such as construction, professional services, and healthcare and social assistance, which are going to be key drivers for Australia's economic growth overall heading into the future. But the First Nations economy is growing fast, and it's even outpaced the national average on some measures. The proportion of First Nations people who own or manage a business have grown over the past 5 years, whereas if you look at the national trend, it's actually declined. And new business entries across First Nations owned businesses grow at a rate at around 4 times the national average. The First Nations population is also on average younger, with around 43% of First Nations people aged under 20 years old. Compare that to 26% nationally. So a younger population will help drive labour force participation against an ageing demographic when you look nationwide. When you take Canada's Indigenous gross domestic income of around 60 billion Canadian, or the Maori's economy's asset base of around 126 billion New Zealand dollars, it does suggest that Australia's First Nation economy is on an accelerating growth trajectory.
Richard, I guess given that context, what is the current growth outlook for the First Nations economy according to this report? And how do you expect its industry mix to evolve, even if it continues as business as usual?
So these works in an ANZ Deloitte Access Economics report called the $50 billion opportunity. The title gives you an idea. If we start with the $16 billion in revenue in 2021 and think about the scale, as obviously growth requires investment, but the base is quite good. Just some current numbers about where we are. $1.4 billion awarded to Indigenous businesses from federal government procurement in FY23. 86% of private businesses aim to increase social and Indigenous business procurement. 29,000 First Nations people recorded as owner-managers in 2021. So the base is definitely there, and that's already been generating growth. So a simple extrapolation says the market doubles by 2035, but if we can unlock the real potential, we end up with something closer to $50 billion with the right investment, partnerships and expansion. And that should also be seen in a more mature sectoral mix. As the number of businesses grow, we're likely to see the spread of those businesses across the economy also mature.
Richard Yetsenga and Sophia Angala there, speaking to my colleague Alex Tarrant. I'm Bernard Hickey. That was 5 and 5 with ANZ for Tuesday, July the 1st. Catch you tomorrow with more from Sophia and Richard on how to unlock further growth in the First Nations economy. This podcast contains general information only, not investment advice. You should obtain advice for your personal circumstances before making any investment decisions. Please view the podcast disclaimer available via your media player or email.